All right, hope everyone's doing well. So, really, I don't even know it. This is the dollar yen 5 minute. It's my favorite forex market. It's the primary one that I trade, and the only reason for that is I really like to stick with one market. I've just found that I do better when I just look at one market, and really just because I can get a better feel for what else going on one time frame, and there's plenty of trades on one market in my opinion. And I like the USD. I like the dollar or the euro dollar. However, I just in my it's small. The range is smaller, which is if you think about it, it makes sense. The dollar yen's more expensive. The euro dollar's cheaper in terms of margin requirements. However, that should not be a factor. And yeah, it just moves a little bit more. But anyways, so I was looking over here. This is May the 11th of 2017. Right around here is about 6 a.m. Central Time. And I was really just kind of looking over days, and I was thinking, this caught my attention, and I was wondering, we had a strong breakout, and went sideways, did not really get a second leg down. Arguably, this was the second leg down, and that is a minimum by definition. But I was really wondering, why did we get a strong reversal up and turn down? I was trying to think of the logic behind this bar. And really, to me, the most obvious things are, other than your typical, three pushes down, one, two, three. The two things that struck out were, one, gaps were closing. So we'd get a bear breakout, bad follow through. And typically, as the trend progresses, you get worse follow through. So breakout, bad follow through, another breakout, bad follow through. Next is stop entries. This bull bar, reasonable buy. These bull bars will be even more of a reasonable buy. Probable exhaustion, the gap's closed, second entry. So a lot of traders, in my opinion, let's say they bought above this bar at 1404, so 114.04. Price went down to, went well under 10 pips. So bulls would buy, scaling 10 pips, scalp out. So really, and really what I'm getting at is, just because you see a bear breakout, you got to look at the context. You know, many ways to handle it. Maybe traders sell, maybe you get out after this bad follow through above this bar. Maybe you sell, you get stopped out, and then you re-enter on this bar. And if you did, you'd have made up for more than your loss. In fact, you would have you'd have made a little more than what you lost. Or many traders, they'd sell, and in fact they'd sell more at this high and use the stop potentially up here. Many ways to handle it. All right, just a really, and another example. This is a reasonable buy. Bulls will buy, scale in lower, scalp out. Here we tried to get we were trying to form a bear flag, got a bull break out of a bear flag, probably at least a second leg up. As you can see, the gap closed. We met the minimum. Three pushes up. One, two, three. And going sideways. So it's kind of a nested wedge. One, two, three, and then one, two, three. Expect two legs down or sideways to down. And it looks like went sideways in the close. So large two-legged pullback. We ended up just channeling even more down and went back to these lows. So, anyways, hope this video helps. It's just a really short introduction or kind of a short lesson on when you get reasonable stop entries in a bear channel, they usually get filled. So let's look over here. Here's a reasonable looking buy, but we didn't fill it. It just kept going down. Well, this is not really all that reasonable of a buy. It's a very tight channel. Haven't touched the moving average in many bars. So first reversal up should be minor, minor, minor. Even this reversal is minor. You know, not getting consecutive strong bars. However, sideways, 3 pushes, 1, 2, 3, probably will come back into this range. If you look at this, this is a decent sell-off. So it's probably exhaustion. And when I say decent, I mean it's compared to how far down it went. But I'd be out. I would not sell down here. And then starting to go sideways. More kind of forming a trending trading range. Trading range, bear breakout, trading range. I think we'll probably get back into here, but I could be wrong. This is a pretty strong channel down. 3 pushes, 1, 2, 3. You know, trends always look like they're bottoming. Therefore, you have to be very careful about really buying these lows and holding. You know, we have an open gap, so you always got to be thinking we get something like that. And even though over here, when I'm saying I think we'll get back into here, I don't know. We may have to get on here first. So I'm only saying I really don't want to sell, but I don't want to buy it either. And now look, so again, more of a final flag. One of these will be a final flag. Here, got more down. Here, probably a final flag. Here, the character of the market's different. So I'd be out of shorts. We're probably testing back into this area, but again, might be a minor reversal, but I would not be short. And we got quite a few legs up. So as you can see, we ended up testing back into this range, but the problem, and this is probably a 50% pullback in fact to this, so I'd be out of shorts up here. I'd be out of longs. Channel's pretty tight, better to look to buy a pullback. And bulls will buy either 50%, even if we fall down to here, bulls will buy again. Another little tidbit, you know, again, I was saying that I think we would come back into this range, and I think that we would test back into here, which I still think we will. And we ultimately did, but as you can see, we went, I said that we would fall, I said we would come back into this area, somewhere in between here, and we went from 111.17 and we sold off, you know, almost a 60, 70 pips more. So if you're buying in here, the traders that are buying up here, betting we'll get back to it, are using incredible stops. So you don't want to be buying, it may not be good enough to buy and put a stop right here. If anything, you're buying and you're looking to buy 20 pips, 30 pips, 40 pips lower. You're using a stop down here, but it's profitable. It's a way to do that. And as you can see, consecutive sell climaxes, better look for 10 bars, 2 legs. This is obviously a wedge on maybe a 30-minute chart, so maybe 15 bars 10 bars sideways to up on a 30-minute chart or an hourly chart. Over here, 50% pullback, and we started to turn up. So spike, pullback, 3 pushes, 1, 2, 3. It's very common to get a breakout such as this, pull back and have 3 actual pushes instead of the breakout being the first push, second push, third push. Now, you could call it either way. You could say this was the first push, this was the second, and this was the third, and then we had a failed breakout of a wedge. I wouldn't call it that. I would call it two ways. I would either call it a simple spiking channel, spike, pull back, three pushes, one, two, and three, and or I would call it consecutive tops. We had a double top here. So first push, pull back, second push, followed by another top up here, first push, pull back, second push. But really, with context, we sold off, had a big sell off, and we started channeling somewhere in here. Maybe this was the start, maybe this was the start. It doesn't matter. Either way, whether or not this was the start or here was the start or here, we are probably, well, what happens in a channel? The channel is the first part of a trading range. So this is the first leg down in a trading range. We'll probably get a first leg up in a trading range. Usually they're pretty symmetrical. And what I mean by that is if I do a bar count, this was, it appears 98 bars. Okay. This should be in the ballpark of 98 bars. Sometimes it is. 106 bars. So 10 bar difference. I could draw it over here. I could have started the channel, many, many ways. I could really. So it varies. Now, why am I using this breakout as the start of the channel? Well, I could do it right here if I wanted. That's 95 bars. It doesn't matter. I still think, yes, this is a breakout and we'll get some sort of measured move. However, I still think that it's all part of a trading range. And then we went sideways for many bars. And as you can see, sideways, strong bear breakout to a new low, but it's a major trend reversal. Trend line, pull back, sell off. And these will be symmetrical. So here's a major trend reversal, major trend reversal. Strong breakout, channeled up for many legs. So, and that's another reason why I like to focus on one market is if you can figure out what all's going on, you'll be more prepared to take trades. And real quick, channel, we rallied for X amount of bars, just as we sold off for X amount of bars. When you see this, the trend is changing. So we had a bear leg, we had a bull leg in a trading range up to here and here, probably two legs down and a bear leg in the trading range, and that's what we got. We vacuumed below here, immediately went sideways, found buyers. Deep pullback, multiple legs up, three pushes, one, two, three. Three pushes down, one, two, three. Two legs up. Hope this video helps. Thanks for watching.